Good morning, Las Vegas. Welcome to Mortgage Matters. I'm Roland Daniels, a certified mortgage advisor with Geneva Financial. And I'm here this morning, as always, with my fantastic co-host, Heidi Griffith. Good morning, Heidi.
Well, good morning, Roland.
Good morning.
If you've been thinking about buying a home, or maybe you've been waiting because interest rates, today's your show.
Yes, it is.
It is. Because, waiting for rates to drop might be the most expensive decision that you make when it comes to buying a home.
I agree with you.
Yeah, because while you're waiting for a better rate, what's going to happen?
The price of that home doesn't wait for you.
No, prices will probably go up, won't they?
Most of the time it does.
Yeah.
We're hearing it every day right now.
We are.
Right? I'm just going to wait for rates to come down, waiting for rates to drop. But here's the question that we want people to really think about. If you wait 2 years for a lower rate, what happens to that home? Does it cost more in 2 years?
Chances are it will.
It will.
Statistically speaking, homes go up in value.
They do.
We're in kind of a flat market right now. Everyone anticipated as rates climbed, from that 2020 2.5% to 3.5% to 4.5%. Everybody assumed that once we peaked at whatever that magic number was, that we were going to see a crash. How many times did we hear it?
Well, actually, I've been hearing it since 2016, 2017, when rates were still in the low fours. Home prices were in the threes and the twos, and I still hear it today.
Yeah. And those people probably that you were talking to in 2016 and 2017 are kicking themselves because of
Yes, they have missed out on the appreciation when it comes to being a homeowner and, of course, the interest rate.
Yeah. So if you wait for rates to come down, however long that takes, the analysts aren't expecting any big drop anytime soon.
No, they're not.
So if you wait, prices go up. Do you actually win?
I don't think so. So like Heidi said, we've been hearing it all of the time when it comes to rates, appreciation, waiting, the cost of waiting. And I think it's really important that we do explain the cost of waiting when it comes to rates.
Well, and that's a big one. The cost of waiting is truly a thing. And so if you have any questions about anything that we talk about today, or you want to see how this could apply to your situation, please feel free to reach out. You can call or text us. We're at 702-210-2057. Again, our number is 702-210-2057. You can also head over to our Facebook page. That's Mortgage Matters Radio. You'll find the links to all of our upcoming classes and events, find information about what's going on around town, and sometimes we post some fun stuff.
We do.
So here we are, right? Everybody's waiting for rates to drop. That's what I think we talk about today. We hear it at least several times a week,
Maybe that's the new thing to ask, kind of like, what's your rate?
Well, true, but I'm I'm genuinely curious if there is a magical rate floating around out there that we haven't been informed about.
I don't think so.
Because I don't know, is it 6%? Is it 5.5%? Is it 5%? Are people still waiting for 2.5%? Because the likelihood of that 2.5% or 3.5% or even 4%
is not coming back.
It's highly unlikely. And quite honestly, I had this conversation with a guy yesterday. I said, if we see those rates again, we're talking about rates. If we see them again, I'm afraid to think of what's going on in the world.
That will probably be more important than that 2.5% to 3% interest rate.
When we saw those 2.5% and 3.5%, that was during COVID. That was during the heart of COVID, and the federal government knew that they had to step in and stimulate the economy,
right?
Because we were all at home. Lots of us weren't working. We weren't collecting a paycheck, or at least not a full paycheck.
Right.
And they had to get some money moving through our systems.
Yep.
It was a great way. And I tell you what, they did a great job with it, because I remember driving past, homes that were listed for sale, and there could be 20 or 30 people waiting in line to view the home.
Right.
In the thick of it.
Well, now you have supply and demand, right?
100%. So everybody's out there waiting for the rate to drop. When the rate drops, everyone jumps back in at the same time, because there is a lot of pent-up demand.
There is. So when you saw that those people lined up, now maybe they were getting that low interest rate. Some of them were. Mm-hmm. What happened to the home prices?
Well,
was there a bidding war going on?
100%. I mean, that's the stuff that we don't talk about when we're waiting for rates, is that during that time period, money was cheap. I mean, in a lot of, you look at people with a lot of money and they looked at that 2.5, especially when it was at its all-time low.
Right.
And that was virtually free to them. They could keep all of their cash wherever they had it and use that money because it was so cheap.
Right. So instead of paying cash, they just borrowed the money at that
finance.
2.5 to 3%, which is worth it, right?
Do it all day long.
Right, I would too.
But the problem then was, so you were out looking at a house. Maybe you'd planned on buying a house before the pandemic hit, right?
Yep.
And so you're out looking for a house. You find a house that's decent because that's what you were finding. You're lucky if you found a decent house in that time period, and you'd already been turned down on 5, 6, 7 other houses, and now desperation sticks in, right? Because now you've got to have a house.
Right.
And people were offering, above asking price, and it could be anywhere from $5,000 above to hundreds of thousands of dollars above, depending on the property.
And that's not saving you any money. You may have a low rate, but you just overbid or over purchased that property by $50,000. Now you're upside down.
It became emotional because the appraisals weren't coming in on many of these properties, on a lot of these properties, and people got, keen to the negotiation game, and they were writing offers saying that if the appraisal doesn't come in, I'll pay
waiving the appraisal
X amount above whatever that amount is. So if you made an offer for $500,000 on a house, the appraisal came in for, $450,000, and maybe you said you were willing to come up to 30%, you'd pay $430,000 for the house, or the seller would say, sorry, we're going to take somebody who will accept it at, whatever this offer is. And you were either out of luck and on to the next property, or you were literally coming up with the money.
And weren't they also waiving the contingency regarding a home inspection?
They were waiving home inspections where they weren't even doing home inspections. They just, I don't care if your air conditioning doesn't work. I'm buying a house in May and July doesn't, get to 120.
Right? And no AC.
They were giving up every piece of protection that they had. And if they weren't, or maybe they weren't in a position to do that, they were getting outbid. And the majority of buyers at that time were not cash buyers because money was so cheap.
Right. And I think it caused something momentum.
It's FOMO. It's fear of missing out.
Fear of missing out, right?
It became,
instead of thinking logically, now everything was based on emotion.
Absolutely. And buying a house is emotional.
It is.
It's possibly the biggest financial decision you ever make in your life. So it should also be logical, 100%, but it is emotional.
It is emotional.
But when you get caught up in that and you see that, there's 30 people standing behind you that want to buy the same house, you start to get a little shaken up.
Well, I think that dopamine starts to
100.
hit, right? So then you start to think illogically.
Yeah, and you probably, because most people at that point, they lost a few offers before they got one accepted. At some point, you're like, well, are we going to buy or we aren't? And I wasn't watching people walk away and say, forget it, we'll wait. In many instances, most people were just moving on to the next house.
The next person.
And then people were like, shoot, I could sell my house and make, $100,000 more than it was worth 6 months ago. Let me put it on the market and see what happens. And it was happening.
It was happening.
And so as we started to come out of that craze, all that people really remembered were those interest rates, and they were phenomenal. Don't get me wrong. Those were the best of the best.
Because we still have some people who overpaid by that $50,000-$60,000.
But they made caboodles of money in most instances. They came out smelling good because of the increase in values year over year. So if you bought early in 2020, you came out pretty good.
Well, that's when appreciation was hitting double digits above 20%.
Oh, it was crazy.
Because in a normal market, appreciation is around 3 to 4%.
Single digits. And, maybe sometimes a little bit more, 6, 7%, but single digits is...
Not 20, 25% year over year.
Well, you can't sustain that.
You can't.
You can't sustain... I mean, at that rate, if that would have continued to today, we would have been higher than LA.
That is true.
So thank goodness it didn't, right? Because I know personally, and I'll speak for you on this, affordability is important. And we are, getting farther and farther away from affordability in the city
because
as it
our
stands.
wages hasn't increased along with the housing prices.
And it typically doesn't.
No, it does not.
And when, when they raise minimum wage, and come on now, but when they raise, that's fighting tooth and nail to raise it a few bucks.
Right.
People are still having to work multiple jobs.
Of course, because we have to live.
Yeah. So waiting for the rate to dot, let's just think about this. We're waiting for whatever that magical number is for that waiting period. And as we continue to do that, maybe prices aren't, flying through the roof right now.
But they're still
But they're
increasing.
not going down.
No.
They're not going down. Maybe in some, if the house was overpriced or the seller's desperate or it's in a specific area, yes. You can't. The market that I'm talking about is the greater Las Vegas Valley. Right. But with that, there's submarkets. Every neighborhood could be a potentially submarket, right? But overall, we're not seeing prices come down. We're still seeing them go up. They're just not going up 20%.
Right.
They're just trickling. There's about 10,000 homes listed for sale. That's a bigger number than we've seen over the last couple of years. But just keep this in mind. In the Valley, we have close to 3 million people. We've got 10,000 homes on the market. Many of those homes are very expensive. Many of them are completely gutted and need complete rehab and can only accept cash offers. So you've got to take those out of the mix. Average sales price, depending on who you talk to, is between $470 and $480. Prices aren't coming down.
No, $470 and $480. Our wages haven't kept up. Now, let's say once it hits over $500,000, then we're in a different situation as well.
100%. So once rates come down, because we talk to several people a week who are waiting, right?
Yep, we do.
All of those people that we talk to, they're going to make a dash to put offers in on properties. Do we find ourselves in the same spot? Are we now driving prices up? Are you now spending $40,000 more? And that's just a random number we throw out there, right? But is $40,000 just a number? No. If you wait 2 years for the rates to come down, because we don't, there's a lot of factors that come into mortgage rates.
And we don't have that crystal ball.
We don't have that crystal ball. No indications show that we're going to be lowering mortgage rates any substantial amount.
No.
We see dips and valleys throughout the week, but we're not talking about things that are going to make an impact in your payment.
Yeah, it's like a 0.5% impact to your payment. So the news and social media say, well, wait, rates went down today. Well, for an example, rates were at, let's say, 6.49 last week.
And that's just an example.
Yes. Yeah. Now it's at 6.48. They're like, all right, rates have went down. But
jump in. No.
What does that mean? Your payment went down by, I don't know, $8?
Right. And so when they do come down to whatever this number is, right? People jump back in. Maybe we're not in that ridiculousness that we were in when rates were 2.5% and 3.5%.
But I still think a bidding war could happen.
Well, not only that, but we're going to drive prices back up. So now you're going to spend $40,000 more, and it's just an example.
Correct.
You're going to spend $40,000 more on a house because you got, I don't know, whatever that rate looks like is.
Right.
When you could have bought the same exact house today, not had to compete against 4 other people.
Right.
And paid $40,000 less for the property.
And you're already in the property. Now you are a homeowner. Now you're taking advantage of the appreciation in that property. Building equity. So when the rates do drop, now you have an opportunity. You already are in the property. We can just do a refinance to that lower rate.
Yeah, because you can refinance an interest rate. Can you refinance the price you agree to pay for the house?
You cannot.
No. And before we even get into anything else, you have to look at how long it actually takes people to get ready. If you've listened to us before, you've probably heard this statistic.
Right.
Studies show that it takes people an average of 7 years to save for a down payment.
Can you imagine that? 7 years.
And studies sometimes are skewed.
Right.
But ironically enough, I'm scrolling my phone yesterday, and Realtor.com put out an infographic that showed how long it took the average buyer to save for a down payment by state. And so
where does Nevada fall?
It was interesting. So Nevada's at 6 years and 7 months.
Okay.
6 years, 7 months. So we fall right in that average.
Yes.
California, almost 11 years to save for your down payment.
Well, look at their home prices.
Right. I think that somewhere in the Midwest, I want to say it was Indiana, was the lowest amount of time the average buyer waited. And that was still, I think, close to 4 years for that. So 7 years in a real estate market, it's not the same price point. So if rates come down, right, and it takes you 7 years to save for a down payment, what's going to happen? The market keeps moving.
And home prices continue to increase.
Yeah. So, saving for a down payment, it's a tough one. While you're doing everything right, you're saving, you're being disciplined, you're waiting, the market's moving ahead of you.
It is. And you're losing out on appreciation.
And so that's why I think that the strategy that we've kind of created coming into where we're at in the world today has helped so many people.
I agree.
We help people every single day by using down payment assistance. We have over 20 programs.
Or at least give them the option and the opportunity to use it.
Absolutely.
Right?
But we're seeing, because a lot of people are waiting for rates to come down, this is one of those times where if you weren't in a position during bidding wars, if you weren't in a position to overpay for a house because you wanted it, so you were still stuck renting as rents continued to rise and rise and rise, because right now, our average price rental, again, depending on where you are in the city, is between $1,700 and $1,800 a month.
And they're saying that the appreciation, or how should I say, the appreciation in rent, which means rent is going up about 3% a year as well.
Yep. And as we continue to wait for rates, right, they just don't get better on their own.
They do not.
Like I said a few minutes ago, if rates took a massive,
going the opposite direction.
They just crashed. We got these great, magical, happy rates. Something happened.
Something is going on.
Things that impact interest rates. You've got inflation.
Inflation.
Here we are.
Right now with the oil prices, that's a massive effect on home prices.
Not only is it on interest rates, but look at what we're doing at the pump.
Yes. And that affects all of our pocketbooks.
It stinks, yeah. The economy as a whole.
Yep. And the decisions made by the Fed.
And what about, you can't stop and say what's going on in the world.
The global events.
Yeah, war.
Such as war, instability. The markets are unsure. The markets, they don't even know what to do. It goes up 500 points or 1,000 points. 2 or 3 days later, goes down 1,000 points.
And then you get 1,300 points up, and then it's a daily thing. I don't know if the analysts even know how to make these predictions, because quite honestly, traditionally in the mortgage industry, when there is some type of conflict,
right, it's usually great for rates.
It's one of those sad things to say, but war, conflicts, they do well in the real estate world when it comes to mortgage rates. This is not the case today.
No.
That is not what we're seeing today.
History is being rewritten.
100%. Yeah. So just to understand, if you listen to what most analysts are saying, they're not expecting dramatic drops in rate. They're expecting, if we see some improvement, it to be slow and gradual.
Right.
This isn't going to happen next month. So if you think rates are going to drop next month, and, I hope that they do. That's my hopes. But it sure doesn't look like they're going to.
No. And then even when the Feds meet and, they're 4 to 6 times a year, remember, those are short-term interest rates, and it doesn't equate to long-term interest rates like a 30-year fixed-rate mortgage.
Right. So when they're talking about rates, they're talking about credit card rates.
Yes. HELOCs and stuff like that. The adjustable loans, such as that, credit cards and stuff like that, but not long-term rates.
But there is no talk about them, coming in and bringing long-term rates down.
And that's going to be tough. In this market, it's going to be very tough.
Yeah, the bond market doesn't know what to do either.
Substantially.
Yeah.
So it may fluctuate between an eighth or a quarter here and there, but
not 2 points.
How does that affect your monthly mortgage payment? Not by much, no more than $30-$40. It could if you're in $1 million home, but that's a whole nother story.
Right. Then you're looking at money differently.
Yes, you
anyways.
are.
And are you a betting man? That would be the big question. Are you a betting man? Because I tell you what, I remember you and I driving around in 2010 looking at properties.
Yep.
You'd thought about doing an investment property.
We should have pulled the trigger.
We were looking at townhomes, really cute townhomes, for $45,000.
Can you imagine that?
Yes,
Just
I can.
15,
My brain
16 years ago, that same $45,000, $50,000 townhome is now selling for over $350,000.
And the only reason why it's not more expensive than that is because of the large HOAs.
Yes.
Because of the large HOAs. So just remember, if it takes you years to save for your down payment, there's no clear timeline on rates. What are you waiting for?
Yeah.
What are you waiting for?
Because with down payment assistance programs, and we have you covered.
Yeah.
You don't have to wait the 7 years.
Yeah, because there are strategies that we can figure out.
We utilize it every day.
Yeah, so there's ways to move forward without draining everything you've worked for or having to wait just years to try and save up. Like we said, 6 years, 7 months in Nevada.
Right.
So for a lot of people, it's not even about, wanting to use their own money. They don't have the money.
Right.
So if you say, okay, I'm going to start saving today, you're waiting until you save.
Because now I'm trying to figure out, what can I live without for the next year or two, and how much can I save on a monthly basis?
Average person takes 6 years, 7 months in the state
of Nevada.
What does the housing market in Nevada look like? And again, we don't have a crystal ball.
We don't, but with appreciation being very conservative, you're probably looking at that same home going up $70,000 to $80,000, and I don't see our incomes increasing by $70,000 to $80,000.
So how are we today helping people get into homes that don't have that 7 years to wait?
We are utilizing, like you said, different programs that are available to them. Doesn't mean you have to use it,
but the option's there.
The option is there.
The option's there. And we talk about it a lot because I believe that we really understand and believe, the value of homeownership.
We do.
And, starting to build that legacy and grow your wealth. But even outside of that, you have to have a roof over your head. Right? You have to have a roof over your head. So it might not be bad to start thinking about it now before all of the frenzy, because there will be a frenzy at some point.
Because you have to pay a payment one way or another. So it might as well be yours.
Absolutely. Absolutely. So let's talk about how we do it. If you've tuned in before, you've probably heard this little trick, but it works time after time. So we take a look at the different down payment programs available. We primarily work with the Nevada Housing Division.
We do.
And Nevada Rural Housing.
Yep.
They both have programs that set folks up to be successful homeowners. And that's a big thing to us. We don't want you to buy the biggest house. We don't want you to buy the most expensive house because it's cool.
Right. We don't want you to be house poor. We want you to be the most successful homeowner possible.
Yeah, because that really means having money left over at the end of the month, so that if you need to do something at the house, because once you become a homeowner, you're responsible for everything that happens within that home. If you want to go on vacation, if you want to paint, a bedroom, if you want to put new countertops in, whatever that looks like, we want you to be in a position that you're gaining equity.
Right.
And that you put yourself in a position to be financially secure doing it. So the Nevada Housing Division has programs right now. They've got the Worker Advantage program. We won't go too far into it, but that's $20,000 with the ability to buy down your interest rate.
For the people who are waiting for rates to drop, this is an opportunity.
Well, and that's exactly it. So because we're seeing people have the ability to purchase a home with less than it would cost them to go rent a property. Because when you're renting a property, if you're leaving where you're currently at, let's say you're going to go to a new apartment complex.
Right.
What do those deposits traditionally look like?
Well, remember, you got to have first and last month's rent. There's an application fee. There's processing fees. Security deposit.
Key, pet.
If you have a garage, there's all types
maintenance
of fees.
Yes. And remember, when you live in a lot of these apartments now, especially the quote unquote luxury.
Yes.
The luxury apartments, they've got all different kinds of amenity fees that you pay.
Those
a lot
are
of times
to $2,500.
You've got to pay the cable, you got to pay, and now they've got these trash fees. So you've got to put your trash in front of your front door, because that's a cool place to have to leave your trash in front of your front door, and then they pick it up. That's really just so that they don't have trash all over the complex. But so you've got all of these fees, and it really adds up quickly.
It does.
And none of it is building anything for your future.
Right? Because when you move out, what do you get? Nothing.
Zilcho. I mean, you had a roof over your head.
You did.
And like I said, some people don't want to be homeowners, and that's cool. But if home ownership is something that you're working towards, then it really is worth the conversation. So let's talk about this really quickly, because you're the mathematician. Will you run me some numbers?
Let's do it.
You got your math brain on?
Let's do it.
Okay, so the average rent in the Valley is about $1,800.
Yes.
What are you spending a year in rent at $1,800?
Just over $21,000. This is like $21,600 a year.
So $21,600 a year to live in wherever you're living. Do you need a calculator? I need you to calculate that $21,600 over 5 years.
No, now we're 108.
$108,000.
$108,000.
So you're paying $1,800, and that's hoping that your rent doesn't go up. And does it go up? Probably so.
It does. Like I said, about 3% a year.
That's the norm. That's the norm. I spoke to somebody the other day. Her rent hasn't gone up in 5 years. I said, consider yourself lucky.
Yes.
You have a great landlord who must really like you. But yeah, so let's just sit with that for a second. You rent for 5 years. Cost you how much?
$108,000.
Out the window.
Out the window.
So what's happening to your landlord?
It's going into their pocket.
Well, and more than likely,
for their lifestyle.
Depending on whatever type of, whenever they purchased the property and whatever they paid for the property, you might have just paid off their mortgage.
That is true. Or paying off that brand new Mercedes.
That's why we always bring it back to the bigger picture, isn't it?
And we do.
Because when you buy a home, purchase price is forever.
Yeah, it's permanent.
Payment doesn't have to be.
It does not.
Because when you own the home, you have options.
We do.
You do. If the market shifts, you adjust.
Right.
And, I hate the term marry the house, date the rate.
Yes.
I hate it. It's a sales technique. It's creepy, but it does have a valid point.
Right.
It has a valid point because nobody's going to ever promise you how much you're going to make on a house. Nobody's going to ever promise you that the market doesn't take a hit for a short time.
Right.
Statistically, it shows that there's hills and valleys in real estate markets. Most of the time, the valley is quick and the uphill is long, and we tend to rise more than we tend to fall.
Right.
But anything could happen.
Anything could happen.
There's my asterisk. But overall, prices continue to rise. Interest rates go up and down.
Up and down.
Historically, we're actually normal.
We are in a normal market when it comes to rates.
Interest rates aren't ridiculous. I mean, yes, because of prices, they're ridiculous. My first house, I paid $103,000 for. I had a 7.5% interest rate. Yes, I was financing $103,000.
Imagine if you kept that $103,000 home today, and what it would be
worth
today.
Stop that. Really quickly, if you have any questions about anything we're talking about today, or you'd like to take a look at your options, please feel free to reach out. We're at 702-210-2057. That number again is 702-210-2057. Most people don't miss out on home ownership because they can't buy. They miss out because they waited too long trying to get it perfect. Perfect doesn't exist in real estate markets.
Thank you for spending part of your morning with us. If you have any questions, or even if you have an idea for a future show, please feel free to reach out. You can give us a call or text. That number is 702-210-2057. That's 702-210-2057. We'll be back next Sunday morning at 7:30 a.m. right here on KUNV 91.5. Until then, believe in what's possible, even if you've been told that it's out of reach. And remember, stay true to yourself and your mind.